Hello and welcome to another episode of the Digitals at the Cruel World podcast, brought to you by The Loop. And today, I am joined by Alastair, Barlow and Vipul, Sheth from Advancetrack. I'm delighted to have them on. I mean, obviously, Al and I go back away, and to be fair, so do Vipul and I, but we just don't get to hang out as much as I'd like to. But it's great to have you on. We've got a whole bunch of really interesting stories today, just to go through updates on what's going on in the world. Obviously, a big bunch of AI stuff. It's inevitable, but just a couple of things that really stand out. We've got some interesting talk about sort of ID verification and what's happening there, and maybe some better impacts that we could have in our space. Some chat about e-invoicing as well. We know that's coming down the track, and that's the iceberg that's going to take us all down potentially with everything else, MTD and everything else that's coming for us. And also good to hear that actually some products that we use day to day are starting to modernize and bring stuff. So we've got a really great update with Croner's AI assistant. And then one final thing, some neat little functionality releases from Socket, who are just listening to accounting practices and making sure that they get everything nailed down for firms. But Vipul, how are things in your world? You mentioned just before we came on that you're about to start traveling around the world again. So what's occurring?
Yeah, so we've got conferences in North America. So I'm using that as an opportunity to add a little bit of travel to my personal life. But so an international network, they've got an event in Vancouver, and then we're at Xerocon in Denver towards the end of August. So yeah, exciting summer.
Awesome. Alastair, how are things for you? How's being unemployed?
I'm being unemployed. You rip me for that every time. Well, first of all, it's great to be on my very first Loop podcast, or the Loop podcast, having guested on the Digitals, but nice to be part of the Loop. That's pretty cool. John, I'm looking behind you at the two things that probably matter most in your life. One is your ICAEW certificate, and the other is a set of skis, which are still not put away, or you are really prepared for the next ski seasons. Which is it?
Well, still not put away, because clearly I'm not prepared for the next ski season. Although I have been watching a few videos of people out in France on the glaciers and skiing there, and then and because my Instagram feed is basically just full of food or skiing. Also, watching people out in Chile and stuff and skiing over there. So if I had the time and the opportunity, I would do one of those two things, I think.
We're welcoming Fishbowl to our podcast. Fishbowl is inventory and manufacturing software for businesses that have outgrown spreadsheets and bolted on add-ons but aren't ready for a full ERP. They've got over 25 years building this product in the US and 15 years in Australia, and now they're showing up properly in the UK, both desktop and cloud, working alongside QuickBooks and Xero. What stands out is their manufacturing depth. There's multi-stage bill of materials with sub-assemblies, mid-build component swaps without having to cancel the work order and reissue it, and capacity and production planning, true landed cost reconciliation, and all four costing methods, FIFO, LIFO, standard, and average, which is rarer in this category than you'd think. The other thing worth knowing, when you're quoted, the price includes the product. So barcoding, AI insights, the reporting modules is all in. They're not on a list of extras. And when you call support, you get a lovely Fishbowl employee. So the accountability always stays in-house. It's worth a look if your inventory tool wasn't built for the operations you're actually running right now.
Okay, I've got the first bit of news today, and it's a rather interesting story because a former KPMG partner has joined an AI startup. Of course, it's an AI startup, after they've just received 10 million in fundraising. So this is a Berlin-based AI firm focusing purely on audit, and have raised money from Dawn Capital with a specific objective to launch their product and expand into the UK, targeting, as I said, the audit market, because they have a perceived view that there's a skilled labour shortage in the market. So this product is called Cortea, founded by a couple of German guys in 2024. So as always with AI, the timelines for everything are shortening, and they pitch themselves as being the place to kind of improve audit quality, whilst also managing the capacity constraints of the staff issues that we talked about. So it is purely focused on audit quality. They basically allow you to run a bunch of audit quality agents that sit on top of basically your audit system. They haven't really been clear about how that works, because many audit systems are not in the cloud, although some are increasingly moving to the cloud. But it essentially looks at things like the audit reports, the disclosure notes, financial statements, et cetera, that go on there, trying to identify any errors and stuff. So for me, actually, the reality of this is it feels more like a financial statement review checking system rather than really a pure audit system. And there are already a couple of decent products in the marketplace that do that. So interesting to see how this goes. And obviously they've signed up someone from KPMG, so a bit of a big hitter to help with that. Although that doesn't necessarily know that they understand what the audit market below the top four really looks like and how it performs. So it would be interesting to see how much traction they get in the marketplace and also how they react to quite a lot of competition in the market. Al, do you have any viewpoints on that? I know audit's not your thing anymore, but there's plenty to go at over here, right?
Do you know, I lived and breathed audit for a decent chunk of my early career. Thankfully, I've left all that behind, but I certainly appreciate technology space and to speed up an audit and make the quality higher, because effectively that is the failing in the system sometimes. It's when you see kind of a lot of these court cases around poor and failing audits, which is, it's kind of beyond me how that happens. I guess it's kind of comes back to the pressure on the team to get something out, and things are maybe overlooked. And essentially, if you look at kind of how an audit team is constructed, essentially people are learning on the job, right? Which is not really the right way to identify things. So I think anything that can increase audit quality is a good thing. I would be interested to see if this is complementary to something like Inflow, or at some point if it nibbles at the heels of Inflow. So yeah, I think anything that helps increase quality and public trust in the audit procedure is a good thing. So let's see how it pans out.
Achievable.
Going on from what Alastair says about helping them, I think the big thing will be how the more junior staff actually use it and interpret it. Do they have the skills to interpret the information in a way rather than just saying, oh yes, this tool's given me this answer, it must be correct, without having that actual thought process. And I think that comes a little with experience, but maybe the tools will, by having a big hitter on the team, actually allows some of that thought process to be built into what the platform that they're building. So I think that will be the interesting thing to see, is to how intelligent are these systems that they help perhaps the more junior people who are actually looking at the outputs before it gets to manager and partner level.
I think this kind of like feeds into what is going to be very, very topical over the next number of years, number of months, is the liability. And with more and more, let's call it, promise of tech tools to do more of the workflow, humans are going to have a natural bias to rely on them more. Now, at the moment, there's a clear distinction between who owns that liability and who's responsible, which is the accountant, right? And that's kind of the way we all perceive it. But those maybe junior members of staff, or as the world goes on and we're more comfortable with technology and that it can do more of the kind of the value chain, are we going to take our foot or our eyes off the dotting the T's, crossing the I's in every aspect of kind of the processes, not just on it, but the kind of all processes that we're involved in as accountants? And we just get lazier and lazier. And I guess if you think, oh, I'll do 99.9% of the checks today, and next month you do 99.9% of the checks you did last month, and 99%, and all of a sudden you're down to doing a lot less than you should be doing because of this technology bias. And we're kind of like just relying on it. Then actually all of a sudden, are we doing our job properly because we're relying too much on technology? They don't own the liability, or no one's come out to own the liability yet. And obviously, I've said on a pod before about Damon Anson's kind of report around accountant moat is the ownership of liability. And we've got some other topics on this today. But I think that is a really important thing to be mindful of in the months and the years ahead, that vendors are not owning the liability, even though they're owning more of the end-to-end workflow.
Yeah, it's an interesting point. And I guess in this particular example, at the moment, because they seem to be focusing more on the sort of financial statements, quality, at least from what they've said in the press release, I guess that does improve matters. That's always an area where mistakes can happen, particularly on bigger, more complex sets of accounts. But actually, I don't think you see a huge amount of audit risk there and audit failure often. Audit failure happens generally in the subjective areas, the going concern reviews, the kind of the understanding of what's actually fundamentally going on with this business. And that is all kind of the areas where professional judgment, subjectivity can come into play, and you need to be able to have like a cast of people being able to kind of give their opinions and challenge each other. And so what I'm expecting or hoping to see from AI and audit is like it does some of the automation and the processes of validation checks that get us kind of partway through an audit. But fundamentally, those are not areas where big failures occur very often. And so, the objective, I guess, is for firms to save time in those areas to concentrate more on the subjective areas. My concern is that the commerciality will kick in, and what will happen is that it'll just mean that more firms will pick up more audit work or try and squeeze more audit work out of their existing staff, and quality will just continue on its existing trajectory, which is probably upwards, but not upwards at a very rapid pace.
Who'd have thought we could talk so long about audit technology, hey?
I know.
Shall we rapidly move on to the next topic?
Yeah, we'll move on to Vipul with the HMRC thing.
Well, I guess this is about the timely payments consultation, and Tom Herbert, he posted an article, but if anyone read the comments below, they were probably more entertaining, shall we say, than the actual content of, which had a lot of good stuff in it, but ultimately HMRC wants to be paid tax closer to when it's earned. What does it mean for the average client, to the firm? What are they going to do? And I guess, when they say nobody pays more tax overall, and then you look at the cash flow timing, I guess that's, how does that apply to a business that's got lumpy income? Take a retail store that sells gifts. If they've got year end of March, until Q3, they've not got huge amounts. And then suddenly, how does that kind of work, on a practical basis? MTD and, ultimately workload, because clients want help from accountants. Can they cope?
Yeah. I mean, I saw this story and I thought, oh, this is going to cause a bit of an uproar with accountants and bookkeepers. But also at the same time, I think I fundamentally agree with the objective of what they're trying to achieve here, which is, we, as advisors to small businesses in particular, and obviously this is focusing sort of on income taxpayers and self-employed effectively at the moment. We know that they're notoriously bad at planning for paying for income tax payments, and that's one of the big challenges and problems that we have to then resolve at the end of the year, and chase to make sure it happens, and then come up with innovative ways of delaying payments or deferring payments or rolling it into your tax code to be collected at a later time. And if you're going to kind of move to a model which is more akin to what we have with VAT, then I don't see the problem. You submit your quarterly MTD return. That goes off to HMRC. It has a figure in there that might be estimated or it might be accurate. Hopefully, it'll be accurate. You take the money. The business should have made that money in the same way that they have with VAT. And it removes all of this challenge and time that we spend with people saying, oh, just remember to put this amount of money aside in one part of your bank account. I want to do this for the VAT as well. And don't forget the pay as you earn and everything else. Now it's just happening in not real time, but closer to the point, like you say, Vipul. And I don't really understand why this creates more work. I haven't done VAT for a business for a long time, but I don't remember spending a huge amount of time chasing them for payments and reminding them. I submitted the return. I sent them an email and said, hey, Vipul, the return's been filed. By the way, it's X amount. Here's the details to pay it. That is something that could be highly automated. It doesn't take a lot of work, and I'm not sure where this perceived uproar comes from, other than people in the accounting segment are just not very aligned with what HMRC are trying to do and trying to achieve. And actually, I think this comes down to just a huge communication challenge from HMRC, because accountants feel like the burden has been increasingly pushed onto them, rather than HMRC taking responsibility for what they're required to do.
I think it's very evident, John, that you don't run a small business.
Well, I run 3 small businesses now.
Yeah. Okay. Micro businesses, or maybe that's doing you injustice, but I guess kind of if you look at it from a small business perspective, there's an element here of free capital for a period of time, and so everybody's got used to it, right? So there's free capital there, which can be invested, can be used for working capital, et cetera, for a longer period of time, and that's getting squeezed. So there is a cost to that. Arguably, it was never their money anyway, but there's still that cost of capital, I guess, if you make more timely payments. But I think on the flip side, you could then argue, well, actually, it creates better businesses with better cash cycles in it. So that is a good thing. But nonetheless, there is a working capital squeeze there that people need to be mindful of.
I get that, but I guess the working capital squeeze, as advisors, we're telling people to put this money aside and not spend it, right? So the theoretically there shouldn't be a working capital squeeze. The problem is that businesses are operated so poorly that they're basically spending the money that's not theirs to pay for other things, and that's the issue. And so I think that puts the challenge back on us as accountants to advise these businesses to operate better or to stop operating.
Yeah, I think we're in violent agreement.
Yeah, and I think, as Alastair said, the smaller business, they measure their profitability or what have you on how much cash is in their bank account. The number of times when I used to work with the smaller business, and they'd say, you turn up and there's this Range Rover in the drive, and you say, well, you couldn't afford that. Why have you gone and bought it? Well, yeah, I had 100,000 extra in the bank account, but you didn't account for all this money, or you didn't adjust your stock. So you didn't really make any money, did you? And so it really comes down to a lot of that. But for those that are engaged with their accountant, hopefully that won't be an issue.
I always love the businesses that are not making any money, but the owner is driving a spanking Range Rover. Should we move on to a bit of news around financial services? So UK Finance, which is a trade association for UK banking and financial service sector, has issued a press release. So not actually put anything out there, but issued a press release about project and development. So 6 banks, notably not the challenger banks, I think, from my take on it, but 6 banks, Barclays, HSBC, Lloyds, Nationwide, NatWest, and Santander are working with UK Finance to develop a voluntary digital verification service. So essentially this lets customers verify personal details, name, age, address via their banking app and share it to third parties that they consent to as and when they use this app. So you can imagine, first of all, examples are buying things online, verifying your age, being above 18, for example, property transactions, opening new accounts. So professional services, I don't think are part of this, but you could very easily see how this type of verification could reduce friction in the onboarding of new clients. So no launch dates, there's no cost business model to this yet. So this is quite interesting. So essentially, I guess kind of you go on to buy something, maybe alcohol online, and you have to verify your age, and you just kind of click through to your bank, and your bank's the one that does that. And then you kind of click a button, verify, go back, and the bank holds all this data. But I guess kind of like from an accounting perspective, maybe this helps a little bit of the AML journey. So someone like Zama could use this as a service, maybe, as a very small part of their process. But then there's a question, if we come back to this liability, which is one of my favorite topics at the moment. If the bank gets it wrong, I mean, we move house, we don't always update our bank straight away kind of thing. Then who holds the liability for that? Is it the bank? Is it the Zama of this world, or is it the accountant? So, who knows? But yeah, it's quite interesting to, I guess, kind of reduce friction. I'm a big fan of reducing friction. And anytime I seem to set up a new service, I have to do a selfie, I have to speak to the phone, I have to get my passport, I have to scan the back of it, and and it's just wasted time. So I'm all for removing friction. But John, have you seen this? What are your thoughts on this?
What strikes me out as I listen to you more and more is how risk averse have you become in your old age. It's like, I remember this young guy who was out there pushing the boundaries in accounting, and now you're worried about liability all the time.
Maybe it's an opportunity. Maybe owning the liability is a business opportunity. So maybe I should be looking at it like that. So maybe I'm scaremongering everybody else to then come along and mop up the liability as a service. Maybe that's the thing. LAAS, yeah.
That sounds interesting. Yeah, I mean, I think on this, Yeah, I mean, I agree with you. I mean, like, having some kind of place where you can kind of hold your verified identity and then use that to do lots of different things. Whether, like you say, whether you're trying to access things that are restricted to over 18s, or buy things that are restricted, for example, that really helps because obviously certain things like driver's licenses, etc., used to be susceptible to fraud and things like that quite easily. I mean, the interesting thing is like with this transfer kind of into the accounting world, and I remember reading, and I can't remember where it was, but it might have been on accounting where I remember reading a while ago about could you rely on, if a lawyer had already done an ID check, could you then rely on that passing over to an accountant? And the kind of the overwhelming response was like, probably not. Kind of, you have to almost like do the checks again, even if literally you're involved in the same transaction. The kind of the read of the rules, at least at the time, was that you had to kind of like reform that thing, which is stupid, right? It's pointless. There are, of course, a whole bunch of like broad like ID verification systems out there, and there's also been a bunch of apps trying to kind of achieve something similar to this. I think the challenge with all of them is like trying to get a groundswell of people around them, whether it's people in banking, whether it's in legal services, accounting, other areas where these restrictions and these ID checks and verification requirements apply. And then also get the regulators and everyone else to kind of get behind them to support them and say, yes, if Alastair's already verified with his bank over here, then if I start advising him as an accountant, I don't need to reperform some of those checks. And so I can literally just go, okay, tick, job done. But that does then obviously lead back into some of the issues you talked about.
Cool.
Vipul, should we do e-invoicing?
Yeah, so 2029, lots of things happening, isn't there? So MTD, e-invoicing, the timely payment. So lots going on all at the same time. Is it a good idea to have it all together? Obviously, it's different departments, different goals. So I guess there's that. And in terms of vendors, who's going to have the resources to do all of these things? The larger ones, obvious, they're likely to be able to have the resources. So the Sages, the Xeros, Intuit. But then you've got even businesses, the likes of Bright, they've been working with third parties to help them do some of this work. So, but that's not criticizing them. They're just being practical. They want to be ready, and they're just doing that. So I think there's a bit of that. But the Companies House reform, e-invoicing, all happening together. So
yeah, it's stacking up, isn't it? So as we close out the first, the third decade of this century, it's going to be a fun time for accountants and bookkeepers. I guess, like you say, quite a few software houses are kind of already ready for this. Xero obviously made an acquisition specifically in anticipation of e-invoicing across Europe a while back, and we'll see where that goes. And you can already do e-invoicing in Xero, and I suspect a few other apps as well. I think this is one of these things where it's quite difficult to tell like what kind of impact it's going to have. Like I talked to colleagues in other countries like Italy, France, and places like that where e-invoicing has started to roll out or has already rolled out, and I think the general consensus is that the impact was quite varied, which is perhaps a little bit inevitable. Some businesses were more prepared, others were less prepared. Some software was more supportive of the changes and had it baked in earlier. Some were not and were a little bit late to the party. I think in Europe, obviously, it's also tied in with some VAT changes in particular in terms of like how you do cross-border selling. So I think that's where some of the complexity has come from. It's not quite clear, I don't think, at the moment what happens here. I think my one overriding concern though with e-invoicing is and this is both a pro and a con, is that we already know that businesses struggle with VAT. It's a complex tax. There's lots of weird and unusual like nuances, particularly when you think you're trading in the same way, but all of a sudden actually find out that one way was vatable and one way was not, for example, or one way was 20% and one way was 0%. And the businesses receiving invoices are not always picking up errors as well. So I think there is a bit of an opportunity here. Whether our new potential prime minister will pick this up or not, I don't know. But I think we should be looking at VAT reform in the UK, simplification tied in with his objective of moving to e-invoicing as we go forward, because I think that would be a massive opportunity both for the government to do something positive for business, but also to like ease some of the burden of getting this right. Because if I receive an e-invoice and it's wrong, in theory, it's easier to challenge that and reject it and push back. but then I don't actually understand. I don't know what the real process is of kind of resolving that issue and then getting that invoice reissued to get back into my accounting system that I'm comfortable with. And does that actually just put a whole bunch of admin back on me as a business owner, in terms of like checking invoices and clearing them up and everything else, particularly as potentially they bypass some of these products that we're already using that do some of this VAT validation for us.
2 years to revolutionize or revamp VAT.
That's the challenge, right? Okay, I'll move on to something from Digits across the pond. And as a quick reminder, Digits sell themselves as the first AI native accounting platform. They've actually been going for quite a long time now, headed up by a guy called Jeff Siebert, who's the CEO and founder over there. I've seen the product a couple of times. It looks pretty neat, although there are some really interesting things in there which look like they come from decades ago. So the fact that they talk so much about AI is always interesting to me. But fundamentally, what they've done is they've announced a couple of partnerships here to kind of broaden their ecosystem in the same way that most of the other accounting products that they're competing with already have. So they've announced a partnership with Ignition, Karbon as well, and then also a product called Reach Reporting, which isn't over here in the UK, it's only in the US. And basically just there to kind of like build up this end-to-end stack that we're familiar with in terms of allowing you to do both the sort of early stage of engaging with customers, which is obviously quotes and billing and things like that, and then the broader practice management stuff, and then adding on to Digits inbuilt reporting functionality by adding Reach to this, so that you can do more around dashboards analysis and a bit of budgeting, which isn't present in Digits as a core product feature. So I think that's the big add-on for them. Obviously, at the moment for us here in the UK, Digits is not present. They have talked about launching over here. We're not aware of any timetable of that at the moment. And it'd be interesting to see what kind of impact they have, because one of the big features that they've got around bank feeds and bank data is built specifically for the US market because the quality is so poor over there, and they would not have to have that functionality. They could just rip it out and just replace it with the core bank feed technology that we have here in the UK. So how easy a lift and shift that is for them, I don't know, but they might have a big impact over here. And I always welcome competition in this space because I think that keeps everyone on their toes.
So the ledger was a big topic of discussion at the AI Exchange dinner we hosted last week. And obviously Xero being one of the main players in the UK, and are they moving fast enough and in the right way was a big debate. But Digits was mentioned a number of times as well, and favorably, but heavily funded. But I've never spoken to anyone that's actually used it. So do you have any insight on the user numbers over there in the US? Or are they making a big splash from a marketing perspective, or are they making a big splash in terms of penetrating the market?
They have made a big splash. I don't have user numbers to hand, but I know that we've talked about it on a previous episode in terms of like what sort of scale and stuff they'd hit. Inevitably they're at every US accounting event. So most of them, apart from obviously the vendor controlled ones. But I guess also they do have a little bit more competition in the US for AI powered ledgers, because there are 2 or 3 over there. Some of them are at sort of the ERP type scale, so a little bit higher up the food chain, if you like. But there is a bit more competition, and obviously, a bit like Xero faced, they're coming up against a behemoth in Intuit QuickBooks and trying to dislodge them and move them on. So that is challenging, but they have raised an absolute ton of money. They seem to be using that pretty well. Difficult to say. I've seen the product, but obviously haven't really used it properly, so I couldn't comment on how usable it is. I think some of what they've got is very interesting. I was a big fan of Digits in the early days because I actually quite liked their agentic stuff that they had. But some of the stuff like the bank feed stuff from a UK perspective is awful, absolutely awful. I mean, it takes me back to when I started my career that bad.
I think what's interesting about this bit of news, John, that you shared, that 2 of the 3 of those, so Ignition and Karbon, are relating more to running the practice, right? And I mean that in the sense of Digits runs the workflows, the general ledger, not running the business of an accounting firm, which Ignition and Karbon are doing that. And that I think is really interesting, because it seems like they want to play nicely with accounting firms, whereas a lot of the AI native startups want to bypass the accounting firm, whether they say it or not, and ultimately have the relationship with the end business. And so I think what is interesting here is the signaling that they understand accounting firms' entire business model and appear to be mindful and want to work with that and work with accountants. So I think that's actually quite an interesting takeaway, rather than just integrations themselves and more apps.
Yeah, I'd agree with that. Yeah.
Cool. So I've got another one on the world of AI. I mean, it wouldn't be a DigiTools if we didn't talk about AI for most of it, right? So Croner Intelligence. So Croner Intelligence is now on general release. So I'm sure many firms listening have used Croner for many decades. Clearly, they've got a lot of exclusive library of content there, which is now being used and is probably their moat versus a new AI kind of native tax tool coming up. So what is Croner Intelligence? It's an AI-powered assistant for tax professionals. As I say, it's drawing exclusively on their library of expert author guidance than necessarily the open internet or kind of HMRC docs. So they've got a plethora of, even though at Flinder we didn't specialize in tax, I've been in Croner in the past, so I've seen that. So it's built on all that great content from decades, I guess, and it handles complex multi-layered scenarios in single prompts and multi-prompts. And you can also upload additional context or additional documents from the client or background information for additional context. And whilst I've mentioned liability a few times, and one of the buzzwords, another buzzword that I have and I'll talk a lot about is context or orthogonal context or context farming. And that is how you actually get more out of the AI by triangulating and giving it more relevant context to understand how to get a better answer for you. So Croner themselves say it's, which is interesting to not be the wrong side of the liability. It's a research and explanation tool rather than a tax advisor. It gives rules, conditions, and decisive facts to reach your own conclusion, which is, I guess, a big disclaimer to go, there you go. Over to you now. So it's still your liability, Mr. and Mrs. Accountant. So I think the interesting thing is like they are using and harvesting the context or the articles and the guidance they've had for many decades, and which it's drawing upon, which I guess nobody else has that historic context or content. Interestingly, somebody mentioned Croner Intelligence to me a few days ago. I cannot remember for the life of me who it was. It might have been at the AI dinner we had, but they were so impressed. I can't remember who it was, but there would have been someone that I would have respected their opinion on for sure. I've not seen any pricing, so I'm not sure how much it costs. I'm not sure it's part of the existing plans. Probably not. There's no pricing on the website, which tells me, I never like when there's no pricing on the website because it tells me it's expensive. But yeah, John, I don't know if you've tried this or also spoken to the same person that I spoke to, then maybe you can remember who it was.
So I haven't seen it. I knew that it was coming. I mean, as you say, this is kind of like the defensive moat for all of these content providers, right? And so they have to kind of like react to the market and build these things. But the fact that someone has commented and said it's so good, and like you say, probably someone in our circle that we know, is a ringing endorsement, because frankly, some of these content providers have created AI bots and AI supported kind of like research agents and stuff in the past, and they've been a little bit woeful, to be fair. But yeah, it's an interesting take. Vipul, I don't know, do you have any other sort of thoughts on this in terms of I'm sure you remember digging into Croner back in the day in the same way that Alastair and I used to.
That's exactly where I was going with this. Having worked in corporate tax for many years, it was a very important resource that I will have used over a decade or more, and anything that would shorten the cycle or take the context of the query would have allowed that work to, one, have been completed faster, but have the right reference points, shall we say, so that you could make that judgment. Whereas quite often in the past, if you knew your way around those yellow, orange books or red and green books, whichever one it was, that was your kind of choice, made a big difference to the time that you spent and ultimately the value that as professionals we delivered to the client, because you could often spend 2/3 of your time just rifling through those big pile of books, which thankfully I've not had to continue going through them, but have just got bigger. Admittedly, no one has them physically in their offices anymore, but we do have them in tools like Croner. And I can only imagine it's so much harder for a tax professional to actually surface up the information they actually need to answer what sometimes can seem like a simple question to a client, but for us as accounting and tax professionals, not as straightforward as we'd like. And on Alastair's point on liability, they're relying on what we then tell them.
Yeah, absolutely. And I think that reference back to the old books, because I remember those as well. I mean, I think that's maybe one of the things that is a real enhancement for all of these kind of content providers, because my experience of using their online versions, was good. It wasn't terrible, but it was also a little bit frustrating because you'd go and look something up and you get like a ton of responses. You then click into the one that you think's right. That then summarizes where you've got to, but then it links off to like 6 other different things and says, oh, you need to go and now read this and this and this and this. Oh, and there's maybe some interpretation that's been provided by an expert as well, which is always like very insightful, very useful. But then you did kind of like feel like you were getting caught a little bit in a bit of a circle of like hunting down references and hunting down cross references to the things. So I think one of the advantages of an agentic experience over the top of this, or an LLM over the top of this, is hopefully it surfaces that kind of information and those cross links and those cross references in a way that's just a little bit more consumable, and it's not quite so disjointed as you move around, go, right, okay, well, I've got this piece of information here. Now I'm going to kind of go and cross check with that piece of information. Does my client scenario fit into that bucket, or am I having to pivot to something else?
So your Friday night, was it, John? Trailing through Croner. So
usually.
Wild.
I think Croner is one of those that hasn't opened up access to the likes of Claude or any of the other engines. So they're been very smart in not giving access, because you can only imagine what the likes of Claude would have done with that type of information and decades of knowledge and experience that they've built up.
Yeah, I think you need to be careful on that because, as we see, the barrier to building technology is falling. So firms need to find a new moat. And in some cases, that's content, which in this case, Croner Intelligence has the content, or it's distribution, which, the Loop has distribution, right? So that's their moat in this kind of this world. So I think, evaluating what the moat is around a business, a technology business, or the style of business Croner is super important to think about how to protect that. We've seen Xero protect their clients' data. We've seen the barrier there, and then try to shut that down, and they're kind of using that as their moat, legitimately or not. Yeah, I think everyone's scrappling for what is their moat and how can they protect themselves in the kind of democratization of software building.
Yeah, absolutely. Right, Vipul, we'll do AccountsIQ next.
Yeah, so AccountsIQ and GoCardless, they've launched a native GoCardless integration for the mid-market. It's not flashy AI marketing. I guess it's just plumbing, reconciliation, mandates, fee capture. So hopefully, broader point, does it give value to the mid-market? And question for you guys, GoCardless, since they've been bought by Molly, do you think they've gone a bit quiet?
I mean, they've definitely gone quiet in terms of like trying to build out accounting partnerships. I mean, I think all of us probably remember the early days when they were kind of at places like XeroCon and Accountex and stuff a good few years ago, but they haven't really been that high profile. And I guess also they've got a bit of competition now, right? The likes of Adfin and a few others in the marketplace who kind of also, in some respects, like you replace them in many people's minds. I think broadly, this tie-up is good. Any accounting system which helps to automate payments and has payment providers in there is a bit of a no-brainer. I think, if I remember rightly, one of the ERPs in the space has already moved. So, this is kind of like typical that you also see that as well in terms of, better competition in the marketplace. So it's good to see. I guess maybe we will see Adfin next coming into AccountsIQ and some of the other things, but, this is table stakes really, isn't it, for accounting systems, I think?
Yeah, I guess it's kind of like when I saw this, I was like, oh, this hasn't been in place for years. I don't know. It's like something you would kind of expect in place, isn't it? But fair play to the AccountsIQ guys to get that built in. So sockets. I think last time I was on the pod a few weeks ago, I mentioned that Socket was soon to release Forms. So they've now released it. And so Forms is a new module whereby you can use them for lead generation to capture inquiries from your website. You can use it in onboarding to collect details and documents you need after proposals signed, or any other kind of data you want to collect. from your clients, or even if you want to get some feedback from your clients or NPS surveys or that kind of thing. At Flinder, we were massive users of forms because we were trying to automate as much as possible. I'd like to think that maybe some of that inspiration for sockets come from conversations that we've had. But we used Airtable and Typeform because we didn't have this option in place, and kind of then we'd kind of mess around in the back end, and we'd connect via API or API keys to databases and bring in kind of what the client feeds back in onboarding in Typeform and Airtable, et cetera, et cetera. And so we'd use those across the business. We get Slack notifications and stuff. But I guess kind of where I'm trying to say that there is that we did it, and it was kind of ad hoc, and it was a little bit not messy because it was very structured, but it was a bit fiddly to try and get the data harnessed into a database. And so here Socket are trying to reduce friction across the workflows that are involved. They're trying to auto-populate the forms where possible, where we've got that data from the clients, and overall kind of reduce app fatigue. So they need to log into an Airtable, kind of Google Forms, Typeform, whatever, and just remove friction being in different data silos, which was one of the challenges we had at Flinder. Was we had to then figure out how to funnel it all into one database. So I think that's really great from those guys. I watched a webinar yesterday from Si and Simon from Socket. Really easy. You can create forms in various ways. You can upload a PDF and it will create the forms as an AI builder. It will create a form for you. You can describe what you want. You can upload a screenshot. I mean, it's really nifty, really cool. You can do it lots of ways. It can give you recommendations. It can give you things that it thinks it's missing from it, and then you can drag and drop sections. It's got conditional logic, and then you can make it public, private. You can get notified by email or Slack. It's a really cool extension in terms of feature on Socket. It's free right now, I think, but I'm not entirely sure if I suspect there'll be an additional price, but I don't know what that will be. But it's great to see Socket doing stuff that's really valuable to accountants and understand the kind of the data gaps and the process flow gaps in what you actually need when you're running an accounting firm, which is where their insight comes from and where it's been born. So well done to those guys.
Yeah, I'd echo that, and I think as you say, forms just help you to automate more and make things more consistent and sort of standardized, right? So that's the thing. But also, I think it's a really good sort of competitive angle, and I feel like Karbon and a few other products have this, but I also think that they're starting to lose their way a little bit or spread a bit too thin. So Socket can kind of really turbocharge that. Anyway, right, let's move on to one final AI thing, right? We'll talk about, which has come from the ICAEW. They've done a bit of a summary, a bit of a review of where things are at, but also talked about, what are the risks of using agentic AI? I mean, we always sort of talk, I guess, relatively positively about, what the opportunities are. And obviously, we're talking about technology vendors bringing AI into their products and how it's going to sort of supercharge us and give us all a cape and we're going to have superpowers. The ICAEW have taken a bit of a sort of a more grounded approach to this, as I guess you'd kind of expect. Some of it is a bit old as well, so they've done a sort of a tongue-in-cheek, like when agents behave badly kind of a thing. And like I say, some of it is a bit old because they've gone back to kind of some of the challenges that McDonald's faced in 2021. I mean, I would say the space has moved on so quickly that's almost irrelevant. But there are some prescient things to kind of be aware of insofar as the risks that we've now seen more than once, to be fair. But one particular story that I focus on, which is a business called Pocket OS, car rental software business, using Cursor, which is powered by Claude, to help with a bunch of tasks. And whilst trying to build out some functionality and features, the Cursor went and deleted their entire database. So going back to your challenge of having the data, fairly fundamental to a business, right? And when it kind of goes off and deletes your fundamentals, you're a little bit knackered. Luckily, they did have backups in the database system they were using. They managed to recover it, but it did keep the business was out of action for at least a week, and obviously then had to go through that whole process of apologizing to all of their customers. The impact of that, effectively had lost sales as well because transactions had happened on the website but never gone through, or happened on the app and never gone through. And so there's a whole mess that they had to recover from and stuff. Also, we've also heard about other things around, OpenClaw, which a lot of people have played around with, and experimented with, and there are safer options now available to use. You're deleting like an entire Meta executive's emails back in February 2026, which for some people might be quite neat, and then also some challenges around some of the fundamentals that sort of hold everything together. So AWS were out back in Feb 2026, had a huge impact. 13-hour outage, which just meant that essentially all of their AI could not run. And I guess in the same way that if you have an outage with your accounting system or an outage with your emails and stuff, this is now having like significant impacts and stuff in terms of like where we're getting to and stuff. So it's an interesting one. So the nub of this, I guess, is essentially ICAEW do have some guidance. They're actually producing some reasonably good stuff on AI, which is good to see, and they're not kind of like stuck in the past and stuck with a kind of like a very pessimistic kind of view. I should sort of express I do have a bit of self-interest in this because a lot of the guidance comes out of the data analytics and tech communities that I'm part of. But I think there is some good stuff coming from the institute at the moment.
This reminds me a little bit of Silicon Valley, if you've ever seen that, where Son of Anton starts deleting code on the Sharma.
It's always the worry when any business holds data that we do something, we try and make ourselves more efficient, and I'm sure that was the intent of using all these tools. But to have that a week, I'm guessing they were funded well enough they could survive that week, as many other businesses, reputationally or otherwise, would have had a real problem.
That brings us to the end of another episode of the Digitals and Accrual podcast, brought to you by The Loop. As always, we'd love you to like, subscribe, give us any feedback that you want. If we've missed any news or something that we should have picked up and talked about, we'd really love to hear about it. And of course, you can find us on all of the various platforms and stuff, including get and find us on LinkedIn, and you can catch our newsletter, which brings all the news to you every week, a little bit more in-depth analysis and some other bits that we maybe don't talk about on the podcast when we run out of time. But Alastair and Vipul, thank you very much, guys, for joining me. Great episode as always, and we'll see you on the next one.
Catch you next time. Cheers.
Thanks.